Welcome to Investors Insights. Our topic today, the Fed's influence on the markets. I'm joined by my distinguished colleagues, Bobby Norman and Ty Miller. And we've just finished a great meeting this morning, and it was fascinating what you guys have done in research to show the strength of the market, where we see the strength of the market, but also there's a lot going on with the Fed, and we have to keep our eye on a variety of things here, topics and situations. So with that, Bobby, let's start off with you, because one of the things clients are saying, boy, this market's been really good. Why does it continue to do so well? Give us some insight on the sectors and the S&P 500 as to where we're seeing the markets.
Yeah, so as we are nearing the halfway point of the year, we wanted to look at return dispersions across the S&P 500. And to look at where market returns are coming from, I want to share this chart illustrating returns by sector, with each sector represented by a marker size according to its index weighting. So technology stocks, represented on the left of the chart here, has driven much of the market's advance over the past 10 weeks and reasserted its leadership. And so the technology sector currently accounts for approximately 39% of the S&P 500. So our attention is on valuations, as other sectors of the market may be challenged to offset any weakness we might see from technology going forward. And so last fall, we saw weakness in the technologies offset by other sectors. So if the technology sector slows down, based on the growth we've seen, based on the valuations, we will be watching carefully to see if other sectors pick up the slack like they did last fall. So much of the technology sector's outperformance comes down to the index's new center of gravity, I should say, a handful of unusually profitable tech giants. So the Magnificent Seven alone account for more than a third of the S&P 500's total market value. And they're punching far above their weight, posting 63.2% earnings growth in Q1, which is 4 times the rate of the other 493 companies. So let me repeat that. It's important. Just a handful of technology stocks have earnings growth 4 times than the other 493 stocks in the S&P 500. That's impressive. And as we've been sharing in recent weeks, corporate profit margins have been impressive. So in the first quarter, S&P 500 companies kept nearly 15 cents of profit for each dollar of revenue it made. And that's the highest figure recorded since the data provider started tracking the metric in 2009. And so more than double the long-run average of 6 cents going back to 1946. So we'll be following return dispersion across the different sectors as we look for opportunities and if strategy adjustments are necessary.
Yeah, and that's for the rest of this year. We're keeping a close eye on that. And simultaneously, Ty, you brought up we've got to change at the Fed. And from a historical standpoint, that can be eventful. So talk to us about that.
Yeah, I think by now most people understand that Kevin Warsh is set to take over as Fed chair. But maybe what has not been in the news lately with everything going on is that first Fed meeting where Kevin Warsh is going to head up the committee will be next week. And so we are looking into that as there is a change coming up. And so what I have here is a chart showing market performance following the first Fed meeting as a chair. So we talked about the Fed's influence on the market. Typically, the new Fed chair is tested fairly early, as you can see in this chart. Gives you performance 10 days after the first meeting, 20 days, and then 65 days after. On average, 20 days after, the market's down about 1%, and 65 days later, the market's down about 5.5%. As you can see in this chart, we have the average and the median because Greenspan was kind of an outlier there, taking over in 1987. Of course, we had a significant event then that led to a market drawdown. So if you exclude that, that shows the median.
I was present and accounted for that.
And so, that's kind of the Fed's influence on the market. And, how is the Fed influenced? Well, the Fed is influenced by economic data. And so what is the latest report that we got? Well, that's the May employment report, which was actually really strong. So non-farm payrolls rose 172,000 when we were only expecting about 88,000. Also, we were revising up in prior months. In the past, we have been revising downward in the prior months. So the job market has continued to be strong out there. We're seeing increases in leisure and hospitality, healthcare, construction, even government increased a little bit. So the unemployment rate is remaining unchanged at 4.3%, which is, a very strong report. And that is something, with the Fed's dual mandate that they're going to look at because they pay attention to jobs and they pay attention to inflation. So Kevin Warsh is stepping into a time where, at least the job market is healthy. And then we will see on the inflation front, as of course we've had the significant oil pressure with the Middle East tensions lately.
I thought that was excellent on your part, especially after Bobby talking about the strength of the markets. We've got a lot of positives out there. But historically, when you make a change like that, everybody watches to see what the change will cause. So we will keep everybody updated on that as we move forward through the year. And hopefully we'll keep this strength going because right now there's a lot of positives out there. And we'll keep you updated on all our social media, our LinkedIn, our Twitter, our podcast, our Instagram, the vlogs that we're doing here. And we always like to hear from you. Really appreciate those that email in questions or potential topics for us to discuss. It means a lot to us, as well as those of you who have forwarded it to others. So here we are in the month of June. A lot of great news and still keeping our eye on everything. And we'll keep you updated. So go and have a great week. And thank you for taking time out of your busy schedule to watch our vlogs and pass them on to others. Take care.